Hello, how are you today? This video is on the economy of Africa. So this is what we're going to be looking at. Primarily, we're going to go over the Wikipedia page because the Wikipedia has the consensus of information that's been agreed upon. But what we're really looking for is a distortion in the actual reality of what goes on. So we're going to be looking at the perception versus the reality. And this is very important because Africa represents one of the greatest investment opportunities that we actually have. So I'm just going to start here with a couple of words. Okay, so the economy of Africa is trade, industry, agriculture, human resources as well. As of 2009, approximately 1.3 billion people are in Africa. Africa is a resource-rich continent. Recent growth has been due to growth in sales in commodity, services, and manufacturing. West Africa, East Africa, Central and Southern Africa in particular are expected to reach a combined GDP of 29 trillion by 2050. So now we're talking about real figures here and real numbers. And through these 54 countries, we're looking at something like 29 trillion in 2050, which is a lot of money. So according to these estimates, a lot of people are going to get rich and they're going to get a certain percentage of this money that's going to be made. So currently, when we look at Africa here, we see that the GDP is 2.5 trillion nominal. All right. And when we use this method of GDP reading, the PPP, and I have a video on that, so you can go and like really identify what this means. But the triple P GDP actually means the actual purchasing power of this GDP within the continent is equivalent to 6.3 trillion. Okay. So this is the actual figure that makes sense in terms of convertibility into actual commerce in this continent. So there's a lot of money, all right? So in March 2013, Africa was identified as the world's poorest inhabited continent. Africa's entire combined GDP is barely a third of the US GDP. However, the World Bank expects that most African countries will reach middle income status, defined as at least $1,000 per person per year by 2025 if current growth rates continue. There are a number of reasons for Africa's poor economy. Historically, Africa has had a number of rich empires. Okay, so this is interesting to me. Okay, there were a lot of historical rich empires trading with many parts of the world in Africa. However, European colonization and the subsequent challenges created by decolonization and exacerbated by the Cold War created an environment of economic and social instability. So everything was right before the economic colonization and the so-called decolonization. However, as of 2013, Africa was the world's fastest growing continent. Alright, so now these are the facts. The fastest growing continent, 50.6 a year as of 2013. And GDP expected to rise by an average of over 6% a year between 2013 to 2023. So in 2017, the African Development Bank reported Africa to be the world's second fastest growing economy. This is in 2017, second fastest growing economy, and estimates an average growth will rebound to 3.4 in 2017, while growth is expected to increase by 4.3 in 2018. Growth has been present throughout the continent, with over one-third of African countries posting 6% or higher growth rates, and another 40% growing between 4 to 6% a year. This is huge growth. Several international business observers have also named Africa as the future economic growth engine of the world. So this is why we're here, because we are looking at this in terms of investment horizons, and this is worth the salt here. Several international business observers have named Africa as the future economic growth engine of the world, and this is what we're going to be exploring. So far we have a population of 1.3 billion, which is 16% of the world. Okay, and then we have a GDP which is 2.58 trillion. Okay, this is nominal GDP, not adjusted for inflation. But when we take the same GDP, we get to 6.3 trillion, because with this money, with 2.5 trillion, the things that you can buy in Africa are worth 6.3 trillion. That's the purchasing power parity of the GDP. So the estimates are not as accurate in terms of the actual figures on the ground. So this is actually a backdated triple P GDP of 2017. So it's much higher now. So it could be reaching 10 trillion or so. And when you look at this in the scale of the world community, you'd realize that in terms of the triple P, the GDP that's highest in the world is actually China, which is 27 trillion, and then followed by America, and then the United, and then Europe, and all of those other countries. So I guess show don't tell is much better. So this is a list of countries by triple P GDP. All right, I'm not gonna read all of this. Maybe one day. But then anyhow, this is by the IMF in 2020. So the world's GDP will be 138 trillion, right? This is triple P, okay? And then China will be the biggest economy with 27 trillion, US with 20 trillion. The EU as a conglomerate will be 18 trillion, and then India is 11 trillion, all right? So on this list, however, we don't have a figure for Africa as a whole, although we have the United States and all of that, and we even have the ASEAN, all right, but not Africa. So this is why we're making this video, because getting this data is so difficult. But you know, we can just make a safe estimate that maybe, just maybe, it's around 8, 7, because already, according to our Wikipedia here, we're around 6. This is 2017. So in 2020 estimates here, maybe we're looking somewhere around 7, right? Maybe 7 or 8. So it's around about the ASEAN. So these are the Southeast Asian nations. They have a triple P of around 9 trillion. So when you look at it, it's actually not so bad according to the world standards. All right. So this is the triple P, very important digit, because it tells you about the exchange rates and all of the other rates, all things being constant. And this is how you can get a clearer picture of what's happening. And then we have GDP growth of 3.7%, pretty high, pretty cool. And the GDP per capita 1.9. So this is not bad, in fact. And when we actually take a look at it, it's okay, but it can really improve, because we're looking at some other countries which have like per capita GDPs like 80 grand or something like that. So there's a whole lot of room for improvement, and apparently 15% of the people are unemployed. That's very interesting. And there are only 140,000 millionaires in a population of 1.3 billionaires. So there's a lot of room for improvement there as well. Okay, so this is GDP per capita by continent. So the world average is 11,000, all right? So Oceania 53,000, all right? And this is basically the highest. And then America and Canada 40, let's just say 50 grand. And here we have Africa at 1,000. So not so inspiring, okay? And it could be a whole lot better. Okay, so again, we're looking at future economic growth engine of the world. All right, so we're just gonna look at a few things. So here we're speaking of how Africa was diverse, one of the biggest empires in the world, and used to have a lot of trade partners, still has a lot of potential. So colonial interests created by new industries to feed European appetites for goods such as palm oil, rubber, cotton, precious metals, spices, cash crops, other goods. And this is why they came to Africa and colonized. And as we've already read, a lot of things changed after colonization. And this is Mogadishu, which is Somalia, a currency from there. And they had so many different things that they used. So this is ancient Egyptian units of measurements also served as units of currency. So let's just take a quick look at those. Okay, so this is a Mogadishu currency. They look like coins, and yeah, so this is how they used to transact. So this shows you that there was already a system of money and exchange and commerce, because they were very enterprising. And this is in Egypt. All right, one of the earliest, the earliest civilization in the world from Africa. So let's move on. So following the independence of Africa, there was a lot of different things that happened. The dawn of African economic boom, which is in the 2000 compared to China, Africa was home to 7 of the world's fastest growing economies. Excuse me. All right, and we're gonna zero in on this paragraph. As of 2018, Nigeria is the biggest economy in terms of nominal GDP. All right, followed by South Africa in terms of triple P. Egypt is second biggest after Nigeria. All right, triple P. Egypt is second biggest, not South Africa. Equatorial Guinea possessed Africa's highest GDP per capita, albeit allegations from human rights. So Equatorial Guinea had had Africa's largest GDP. All right, my bad. All right, so that's Equatorial Guinea. Africa's highest GDP per capita. All right, so per capita means per each person, albeit allegations of human rights violation. So oil-rich countries such as Algeria, Libya, Gabon, mineral-rich Botswana emerged among the top economies since the 21st century, while Zimbabwe and the DRC, potentially among the world's richest nations, and this is no joke, have shrunk into the list of the world's poorest nations due to pervasive political corruption, warfare, and brain drain of workforce. Botswana remains the site of Africa's longest and one of the world's longest periods of economic boom from 1966 to 1999. And the current conditions. So the UN predicts Africa's growth will reach 3.5 in 2018, 3.7 in 2019, which is fair. As of 2007, growth in Africa has surpassed that of East Asia. All right, so East Asia is where we were looking at in terms of the ASEAN community. And where is that? Where were we? No, not this. No, not that either. This is East Asia. So Africa is growing faster than this region, or faster than this figure. Okay. So data suggests parts of the continent are now experiencing fast growth thanks to their resources and increased political stability. All right. So I'm gonna go here. The economies of the fastest growing African nations experience growth significantly above global average rates. Top nations include Mauritania at 19.8, Angola at 17.6. So this is in 2007. And Sudan 9.6, Mozambique 7.9, Malawi 7.8. Other fast growers include Rwanda, Mozambique, Chad, Niger, Burkina Faso, Ethiopia. Nonetheless, growth has been dismal. All right, negative or sluggish in many parts of Africa, including Zimbabwe, DR, and Republic of Congo, and Burundi. many international agencies are increasingly interested in investing in emerging African economies. So this is what we're talking about. Many international agencies. And what's an international agency? Yeah, what is this? An international agency. Was that a country? What is that? So there's a lot of interest in investing in Africa, as we've already read from the first page here, that this is the future economic growth of the world. And one thing you're going to really see is that the word future is associated with Africa in so many different ways. However, we're just going to read along and get more information for now. So they're investing in emerging economies, and it's not only Africa, by the way, it's also in Southeast Asia and Asia in general. So especially as Africa continues to maintain high economic growth despite current global economic recession, the rate of return on investment in Africa is currently the highest in the developing world. So this is the beans right here. The rate of return on investing in Africa is currently, right now, the highest in the developing world. So you're not going to get these types of growth rates anywhere else, like Mauritania at 19.8%. The S&P doesn't even do 19.8%. So debt relief is being addressed by some international institutions in the interest of supporting economic development in Africa. All right. The UN sponsored this initiative for indebted poor countries, and it's taken up by the IFM, World Bank, and ADF in the form of the multilateral MDRI. As of 2013, the initiative has given partial debt relief to 30 countries. Alright, so trade growth. Alright, and this is an important aspect. Trade has driven much of the growth in Africa's economy. China and India, increasingly important trade partners, 12.5% of Africa's exports are to China, 4% to India, which accounts for 5% of China's imports and 8% of India's. Alright, so they import more than they export, but this is expected since China exports everything. The group of five, Indonesia, Malaysia, Saudi Arabia, Thailand, and the Emirates, are another increasingly important market for Africa's exports. And as I said before, this word is associated so much with Africa. So they're looking at how the future is going to be, and I'm really not going to go into this one as much, but what I think is the potential plan that's going to change a lot of things if done right is this. So there's a African Continental Free Trade Agreement. So this is going to boost trades within Africa, and we're going to go into that a little bit more. But here is just talking about the different virtues that you find in Africa, such as the English skills, right, and education. It's very important. Resources, labor force, all of that. So all of these things that we should already have an idea of, and other things like that. So we're going to be looking at that. But before we go into that, this is an interesting section here, or chapter, causes of the economic underdevelopment over the years. So we're looking at, so it's saying that Africa's poverty has led to debate concerning the root causes. Warfare, unrest, widespread corruption, despotic regimes are both causes and effects of the continued economic problems. The decolonization of Africa was fraught with instability aggravated by Cold War conflict. Since the mid-20th century, Cold War has increased corruption and despotism, which has contributed to Africa's poor economy. Alright. And then we have this whole thing about infrastructure. So this picture shows different highways in Africa and how they are connected. So this red line connects Cape to here, Cairo, and this is a highway. and through this they're able to conduct trades in goods. So in terms of this aspect, causes of economic underdevelopment, all right, infrastructure could be better, all right, so I'm not going to dwell on that. And this in turn, infrastructure, all right, leads to our dependence on, all right, let's look at this map of what it's supposed to look like. All right, so these are the different roads. So Cairo, Dakar, Algiers, Lagos, Beira, all of these countries are connected, and this is showing map of Trans-Africa highways. So all of this is apparent, all right. So it's been argued that infrastructure investments contributed to more than half of Africa's improved growth performance. So the way that I see this is that there's a lot to improve in Africa. So for example, if this infrastructure is improved, this means that there's going to be more economic growth, and this has been proven already. So with the more that things like the Silk Road and China's Belt Road Initiative, the more that that's going to be expanded into other countries in order to develop infrastructure in particular, the returns of investment in infrastructure are very significant. On average, 30 to 40% returns for telecommunications, 40% for electricity, 80% for roads, you see. So this is one growth engine that, because there is so little infrastructural development, when it does begin to flow, all of these returns are going to go for that target rate of 30 trillion by 2050. All right. So, and then colonization, I'm not gonna go into that because it's a very emotional, and this topic is something else, but I already have a video on that called Colonization of Africa, I guess. And let's see, I like Neil Ferguson, let's see what he has to say. Yeah, so he actually has a great documentary on different things. So Neil Ferguson agrees with this last point. What's the last point? Controversial, rejected by some. Economic historian argued Africa probably benefited from colonization. So they say that Africans benefited from colonization more than they were damaged by it. And he agrees with this last point, arguing that colonialism's main weaknesses were the sins of omission. Alright, again, I'm really not going to get into this. But then, as we've already seen here, there was already a great economical legacy that was vandalized. So that changed everything. So sorry, Neil. And then the languages are very diverse. Okay, trade-based theories. All right, so this is another thing. Dependency theory accepts that the wealth and prosperity of superpowers and their allies in Europe, North Africa, North America, East Asia is dependent on the poverty of the rest of the world, including Africa. Okay. Economists who subscribe to this theory believe that poorer regions might break their trading ties with the developed world in order to prosper. So this could be another aspect, that certain countries who depend on other countries for resources, say Venezuela, which has a lot of oil. So it would be in the interest of certain bigger countries to make sure that Venezuela is always in a bad situation so that they can sell their stuff for cheap. So what do you think about that? Alright, and then this is another thing. And I believe that this trade is fostered by colonization, and then the governance, the problem with African governance, which is political corruption, all of these things, bribery, cronyism, economics of corruption, electoral fraud, influence peddling, kleptocracy, nepotism, slush funds, political scandals, simony. What's simony? Is the act of selling church offices and rolls for sacred things. Wow. So all of this stuff happens, right? And you can see like there's a whole thing corruption in Africa, but it's also in Asia, in Europe, North America, but it's very pronounced in Africa because of the potential and all of the money that's there. And through this, I see this crisis in governments as a problem of decolonization and dependency theory, trade agreements, and all of that other stuff is a result of colonization. So I'm not going to get into that, and then there's foreign aid. All right, let's get to the economics, the economy. All right, fine. But then it's important in your own reading when you're going over this. This is also part of the economics, the economic social structure. So you have to know the trade, all of this other stuff. Even though I'm not going to get into detail because we can't make it too long. And then there's foreign aid as well, so you can just check that on your own. So now we're going to go to trade blocs and multilateral organizations. So the AU is the largest international economic grouping in the continent. All right. So the AU is huge, and so they are contemplating a free trade area, customs union, a single market, and a central bank within Africa, and a common currency. All right. Thereby establishing economic and monetary union. The current plan is to establish an African economic community with a single currency by 2023. So if this happens, what's going to happen to growth in Africa? What's going to happen to all of those stocks that are already the driving engine of future economic growth, that are already giving us the biggest returns in the world? So this is plain. And when we look at this, what we're going to look for are those opportunities that exist, like that we have to investigate a little deeper in before we invest. Investing is all about investigation. So the African Investment Bank is meant to stimulate development. The AU plans also to include a transnational African monetary fund, leading to an African central bank. Some parties support development of an even more unified United States of Africa. So this is all being contemplated and has been on the drawing board for a long time. So how it's actually executed is everything. So international monetary and banking communities include, so there's a central bank of West African states, all right, which is pretty cool, and Bank of Central African States, all right, and Common Monetary Area. So here we have African Economic Community. So for me, in all of my research and contemplations, I've discovered that the best way for Africa to negotiate with parties like China is to have these regional blocs negotiate on their behalf. So I'm from the SADC, all right, which is Southern Africa. So we have, I'll take this as an example. So there are 15 countries in the SADC, and the GDP, triple P, right, is about 737 billion, close to a trillion, right? But then when you take the ECOWAS, Economic Community of West African States, it has the same 15 members, right? But a higher GDP of 1.3 trillion. So if, let's say, West African states are going to negotiate with America, they are negotiating for their GDP of 1.3 trillion instead of a country like Ghana with a GDP of 60 billion going alone to the US and negotiating a deal. Then it means that they don't have a lot of bargaining power. But then if the SADC goes to China with about 700 billion, right, then this means that these 15 countries collectively can be able to negotiate with a $15 trillion economy and have more bargaining power than Zimbabwe with a 30 billion economy negotiating with a $15 trillion China. So this is how it has to work, and this is why I'm very bullish on the free trade agreement. So, all right. So Let's see what is here. Economic variance and indicators. After an initial rebound of the 2009, Africa's economy undermined. The continental growth fell back from 5% to 3.4 in 2011. The recovery of North African economies, the sudden improvement, other regionals. Okay. The regions. Alright, so these are the African nations according to total GDP nominal, billions of dollars, GDP per capita, GDP growth, and HDI. So this is the Human Development Index, which counts the which all right, let's just take a look at it. It's an important index. All right, here. Okay, so this is a rank of countries by human development, combining measures of life expectancy, education, per capita income. All right, so life expectancy, right, education levels, and per capita income into a human development index. So this is what it just summarizes, those aspects. So when we look at the world, we see that there's certain countries like Norway, Switzerland, and Ireland. These ones have the highest human development index, which is close to 1, right? And then when we look into this list, the country with a very high HDI index is Seychelles, right? This is the highest one in Africa, followed by Mauritius. And then we have China is all the way down here. Then we have Botswana, which is in the southern part of Africa. So when we're looking at this is what it's telling us. So we have Algeria with the total GDP nominal of 188 billion. Then we have Angola, Botswana, and here let's just rank this from biggest, which is Nigeria, South Africa, Egypt, Algeria. So the biggest economy in Africa would be Nigeria, followed by South Africa with 349 billion. All right. So with Nigeria's GDP, every person apparently has something somewhere around 6,000, all right, in terms of GDP per capita for each individual. They have a purchasing power of 6,000, and the GDP growth in Nigeria is pretty high at 6.8% over 2007 to 2011 on average. But the Human Development Index is pretty low, which is not a good thing. So over the years, as this is improving, all of those sectors in terms of education, health, and employment are going to be improving. So there's a lot of room for improvement. And this money, 500 billion, will be growing perhaps at a rate close to 5%. And all of these industries have a lot of room for improvement. But when you go to a country such as Norway, right, with a very high development index, there's not a lot to improve there. So that's why their growth rates are very small. A country like Switzerland, not much to improve. When you go to Germany, there's not a lot of improvement that can be done because they already have a high development in terms of that. So where there is more growth is a place like Africa, where there are more schools that can be built, more hospitals, more medical facilities, more jobs can still be made. But in a place like Germany, which is already robust, it's very difficult to expand what's already been expanding since the end of colonization. So yeah, what a way to put it, into colonization. And then now looking at the GDP per capita, the highest in the world, in Africa, is Equatorial Guinea with 3,200, with 32,000, followed by the Seychelles, Mauritius, and Gabon. Botswana with 18,000, and the GDP of Botswana is 14 billion. Okay, so for those people, it's a very good thing, and the development is very high. And again, this is a country that had one of the highest growth rates in the world of a country, a growth, continuous growth, Botswana. So this is a very special country, especially in Southern Africa. Then we also have South Africa over here. A high-ish GDP, a triple P. The triple P is pretty low, given that they're the second biggest economy in Africa, but their people don't have a large share of that. So there's a huge disparity in wealth, which is not a good thing. So when we look at the triple P, Equatorial Guinea, Seychelles, Mauritius, Gabon, and Botswana are topping that. Then when you look at growth, which ones are the fastest growing countries? See that Liberia, Ethiopia, according to this time frame from 2007 to 2011. We see that Liberia, Ethiopia, Angola, Equatorial Guinea, Ghana, Uganda, Rwanda. It's been a shining example. Still a very low development index, but very high growth in a reasonably small economy. So this again is what I'm talking about, that the total GDP is 7.5 billion in Rwanda, although they have a very small population, right? But it's 7.5 billion. But what they would be able to do is to go with the countries that are around Rwanda, like Uganda and stuff, Tanzania and all of that. And if they're able to negotiate with bigger countries, they're able to get more. All right, let's see. So the Human Development Index is highest in the Seychelles, Mauritius, Algeria, Tunisia, Botswana, Libya, and all of these other countries. So yeah, so this is what we're looking at, and some of the lowest is Niger, Somalia, and Central African Republic. So economic sectors and industry, we have agriculture. All right, so there's a lot of raw materials that are being exported from agriculture, energy, and there's there's a lack of infrastructure. All right, so the economic sectors are facing this challenge of infrastructure, but there's a lot of mining and drilling. Okay, so when we look at this, this is pretty interesting. So in the 2005 share of world production from African soil is the following. So this is in 1 year. So bauxite 9%, aluminium 5%, chromite 44%, cobalt 57%, copper 5%, gold 21%, iron ore 4%, steel 2%, lead 3%, manganese 39%, zinc 2%, cement 4%, diamonds 46%, graphite 2%, phosphorite rock 31%, coal 5%, mineral fuels including coal and petroleum 13%, and uranium 16%. And if you know something about uranium, this is an energy source that can be used in order to harness a lot of energy. So there should not be any energy shortages in Africa based on this metric. So and then we also take a look at manufacturing. All right. So in terms of this, let's just zero in on this chart with oil, and we see that one of the oil production by country, and this is from the CIA, right? So they're saying in 2017 Russia was producing the most oil, which was 9 billion barrels every day. But the country that was producing the most oil in Africa was Libya, which was producing an equal amount as Iran, which is 4.7 billion. And then after that we have Nigeria, and Nigeria was producing 2 million barrels in 2017 every day, just like Norway. So when we look at these countries next to each other, Norway and Nigeria, we have to make a comparison of the fact that how did they use this manufacturing production in oil. How did it affect Norway? How is it affecting Nigeria? And what are the potential ways that Nigeria can do as Norway does in terms of harnessing the oil potential? Same as Tunisia, which produces the same oil as Australia in 2007, which was 60, which was 600,000 barrels a day. All right, and Cameroon the same as France. So all of these things are to be considered, and so there's actually a lot that is going on within Africa, and I'm gonna skip some of it to leave that to you, but then again, coming full circle, I'm gonna stop here, all right, with these trade blocks, because I think that this is gonna be a determining factor in really how everything is going on. Okay, so the AU is already the largest, all right, and then what we've already gone through with these ECOWAS, all right, which was 1.3 GDP in 15 countries, and this is the name of the organization, the date it was created, the member countries, and the cumulative GDP. And I think this is the determining factor in how Africa is going to change. So this is a $1.6 trillion community, which is Saharan states, which has all of these countries since '98. So I think this type of arrangement, or a common market in East and Southern Africa, these types of arrangements are going to be what is beneficial in helping Africa out in terms of getting it into a more productive sector. Yeah, so there is this African Continental Free Trade Area. So this is a proposal as of 2018 created a free trade agreement. All right, so the agreement was brokered by the AU, all right, in Rwanda. The agreement initially requires members to remove tariffs from 90% of goods, allowing free access to commodities, goods, and services across the continent. The UN Economic Commission for Africa estimates that the agreement will boost intra-African trade by 52% by 2022. And there's this stat that's very important here. Trade between African states account for only 11% within of Africa's total commerce. So this is 5 times less than in Asia, and Asia has the GDP of about 8 trillion, the Southeastern Asian countries. So only 11% of the GDP comes from intra-trade. But through this agreement, they are estimating that the trade will be boosted by 52% by 2022. So I think this is the most important establishment that we've had, because from everything else that we're looking at, we can see that these are aspects that have been in existence for a long time within Africa, but then this is a new arrangement that is projected to have a dramatic effect within the continent. So the proposal is set to come into force 30 days after ratification by 22 of the signatory states on April 2, 2019. The Gambia became the 22nd state to ratify the agreement, and April 29, the Sahrawi Republic okay, interesting. 22nd deposit of instruments. The agreement went into force May 30 and entered its operational phase following a summit of July 7, 2019. So this is pretty fresh. So the general objective of this agreement are to create a single market, deepening the economic integration of the continent, establish a liberalized market through multiple rounds of negotiations, aid in the movement of capital and people. All right. So I don't know what this is going to mean for borders, but as we've seen, some of the plans are for United States of Africa. So we'll see how that moves forward. Move towards the establishment of a future continental customs union. Achieve suitable and inclusive socio-economic development, gender equality, structural transformations within member states. Enhance competitiveness of member states within Africa. This is very important, competitiveness within Africa and the global market. Encourage industrial development through diversification and regional value chain development. This is very good because Africa imports everything it exports. Agricultural development and food security. Resolve challenges of multiple and overlapping memberships. Yes, so if you're a member of this and a member of that, how's that gonna help? And this is very important to realize that the location of this agreement is in Rwanda, and one of the fastest growing cities. And it also pays to understand that the development in Rwanda might be closely tied with this as a correlation indicator. So this is very important, and we'll get into more of this, maybe not. Maybe I'll make a video about it. But then this has been the economy of Africa, which is the future engine of the world's GDP development growth. So I'm going to end it here, and I hope that you got some value from this, and we'll be meeting soon. So thank you a lot.